Okay, I'm recording this video after close of trade Friday the 13th of August 2010, and extraordinary week, big activity today, although Thursday and Friday were really very quiet. Here's Friday's activity on this daily chart of the E-mini. We closed down about 3.5 points, and the range for today was very slight, only about 8.75 points, and 1.1 million contracts traded, again kind of very low on volume here. It was actually an inside day today compared to the prior day. The prior day again similarly had quite a small range, only about 14 points there. So tough couple of days to trade with those small ranges, but we've got the weekend to rest up and wait for the activity for next week. So I'm just going to run through my charts to show you what I'm looking at in terms of the E-mini and some of the other markets that I'm looking at. So first chart just to show you is on the beta sine wave indicator on the daily chart, and I said we were a couple of days, when I did my last video, we were a couple of days away from a cyclical turn on the daily time frame. You can see here's the beta sine wave indicator, and we've started to cross down there at the bottom, which means timing wise we're going to be looking for some kind of cyclical low to be put in over the next day or two, but we do need some kind of price confirmation in order to show that we're going to get a little bit of an up leg. One of the interesting charts for me is if I go down to the lowest time frame corresponding with that time frame chart. So for me, I look at a high time frame, an intermediate, and a low time frame. So if the daily chart is my high time frame, the intermediate chart is 1/3 of that, so that's a 135-minute time frame, and then the lowest time frame is again 1/3 of the intermediate chart, which ends up being a 45-minute chart. So I've talked about this a few times before. So this is my 45-minute chart, and on the lower time frame, what I'd like to see kind of coinciding with a cyclical turn on the higher time frame is an end of trend warning signal. And you can see here this is the kind of the market kind of fell out of bed on the Tuesday night, Wednesday, and we had this down move. Now this is a downtrend, but we've not seen a pullback and an end of trend signal on the 45-minute chart. We're coming up to a cyclical cross, which will print a pullback and a downtrend, but then we've got to go through some activity on the downside, probably a half day's activity or a day's activity to put in the end of trend after that pullback. So we're not seeing that. So although we might kind of be moving around or kind of consolidating, maybe a little bit of rally on Monday, something like that, in order to put in that pullback, we're not seeing a change in overall trend until we see some kind of pullback and end of trend on the 45-minute chart. So I'm going to be looking at that over the next 2 or 3 days to see if we get some change in trend and some strength kind of coming in. But anyway, so that's kind of an important point to look at for me. The other one is when I go down to the weekly time frame on this chart, again talked about this, we're pretty early in terms of what we should be seeing as some kind of end of trend warning signal here on the weekly chart. We broke into an uptrend, we've had our pullback in an uptrend. We should be printing an end of trend warning signal on the weekly chart when these kind of beta sine wave lines cross. So we've kind of jumped the gun in terms of price. Prices started to move before this cyclical turn is kind of being put in. That either means that the market's extremely weak, or what we're going to do is, yes, we're going to have a little bit of a down leg during the last week and some part of next week, but then we'll rally back to put in that cyclical turn and put in an end of trend warning signal kind of closer to where we were seeing some activity before at the 11 kind of 25, 27 type level. So that's a potential scenario that might play out. So I'm just kind of wary of that. If we break through the pullback level on the downside and keep on going, I mean that's it. Everybody's kind of given up, and this thing's into a major downtrend from that move on. So that's having looked at kind of those higher time frame charts and the cyclical activity. Just want to run through the tick bar charts, the swing trading tick bar charts, and this is the activity that we had on a Wednesday. So each of these vertical grey dotted lines is end of close of trade on each day. So this is Wednesday's activity. Tuesday night we kind of started melting down. Wednesday we melted down. Thursday we kept on going, in the overnight session came down to this kind of 73 level, 70 level down here, and we bounced back. And it's a little bit messy here in this chart at the end of the day, but what I can point out to you is we've got a pullback, cyclical level there, and an end of trend warning signal come in there. So cyclical support and end of trend warning signal here down here at 75. And all of these, look at these, quite extraordinary here. I talk about these kind of bullish divergence patterns close to the zero line here. Your whole string of them, 1, 2, 3, 4, 5, just showing that there's kind of as new lows are being made here, there's less and less selling activity going on. And then on Friday, we kind of had this push down, and this is quite similar to what I call a flush. I'm actually going to show you a euro chart which shows you a beautiful kind of flush trade here, but this is kind of a lack of selling, and then the sellers kind of finally try and push down to get this market to move to the downside. It doesn't shift at all, and they run out of bullets at that point here, and then the market can then start to reverse and go the other way because all the sellers have sold at that point. The problem with this chart is that we've not had exhaustion, a clear exhaustion selling signal. And on Wednesday I talked about this point here where the kind of buying, exhaustion buying that we had at the highs was signaled by these two kind of large cyan blue dots at the top here, and we've had this was the extreme selling that we had on Wednesday down to this level, and we had a little bit of a bullish divergence signal print just after that, and so this shows that this was the maximum selling at that point, and it wasn't greater than the buying that we had on the upside. So we haven't seen a clear exhaustion selling signal at this point. So for me the jury's out, and if we break through the end of trend and keep on going, then we're likely to see some kind of exhaustion selling signal after that. So not sure which way this is going to break, but that for me is not kind of good enough to actually signal an end of trend, really, particularly on the downside, because you tend to see more exhaustion selling signals on the downside, because in terms of human activity, the selling, the panic, the getting out of positions is a far stronger emotion, and so that's when you see extreme selling, and that's why tops tend to be made slowly, and you see kind of no demand patterns and a lack of buying at tops, whereas bottoms tend to be made on exhaustion panic selling, and you see extreme selling, and then bottoms tend to be more V-shaped in the way they bounce from the lows. So that for me is not a great kind of exhaustion selling signal. So I'm still wouldn't be surprised to see some strength on Monday because we've had an end of trend print, but let's see if we go through some kind of cyclical activity still before we start moving, have any kind of movement up into an uptrend. On the euro chart, just showing you again, this was kind of earlier in the week we had the end of trend warning signal print and then a second cyclical turn, and we've had in the last days, so each of these grey dotted lines again is close of trade 1, 2, 3, 4, 5. This is the week's activity. In a week's activity on the euro, we've gone from 133.50 down to 127.50, so we've had 6-cent move in a week, which is just extraordinary. Here you can see we've got these exhaustion selling signals here, and we're making bullish divergence at this point here, and then a little bit of a flush signal here, where the selling activity here is more than we had on the bullish divergence patterns, but is not as much on the exhaustion selling signals that we had here. So that's a flush signal for me. And down here we've got a couple of Rambo patterns, amateur buys down at the low. Not a huge amount of professional bars, if you like. I mean, we've only had one on Thursday here, but we might be seeing some kind of slowing in this move. And this is the little signal I wanted to show you on the euro, which is just a beautiful kind of trade here. So this is the day trading time frames that I'd suggest you use if you're trading the euro using the better signals. So the highest time frame here is a 2250 tick bar chart here, and then the corresponding time frame on the lowest time frame is 250 tick bar chart here. You can see coming into the cyclical turn after the close of the session the day before, we were coming up to the 129 kind of level. Again, kind of whole numbers here, very important kind of support and resistance levels. Coming into that cyclical turning point, you can see we've got all these professional blue bars kind of taking profits on that long swing and kind of getting ready to go short. And if you go down to the lowest chart here on the 250 tick bar chart, you can see the same activity. So that was the close of the previous day, the Thursday coming into the Friday. You can see we had an end of trend warning signal here. The exhaustion selling actually came after that, and then all these professional blue bars down at the bottom here, which kicked into this uptrend here. Then just a beautiful signal here with an end of trend warning signal at that 129 level. You can see coming into the first peak there before the pullback, all these professional blue bars, so 1, 2, 3, and exhaustion buying at this point here, and then we have our bearish divergence signals here. We come back into a pullback level, and then this move back up to the end of trend warning signal is being driven by the amateurs. All these amateur yellow up bars with two Rambo patterns right at the top there. Rambo, potential reversal of an amateur breakout. So the amateurs are buying these highs, expecting to break out to new highs. And of course they get wrong-footed, the market turns and goes the other way. So you've got professional activity on the first peak with bearish divergence. Coming into the second peak, end of trend warning activity driven by the